everyone, welcome to another edition of the Golden Turtle Social Club webinar Q&A. This is already our third online event following the success of our inaugural webinar with Doug Casey, which I know some of you attended, and our last event with technical analyst Chris Vermeulen, both of which are available on SWP's YouTube channel if you'd like to rewatch those or you didn't get the chance to join us at that time. My name is Mark Yaxley. I'm the CEO of SWP. Joining me this evening is my colleague, Dave Lawson, who you might remember from the last webinar. Dave, if you just want to raise your hand.
How you doing, everybody?
Dave is a senior member of our sales team located in the Cayman Islands. Dave will be hosting this evening's webinar, engaging and posing questions to Jeff that we've received from you, the audience. So thank you for sending those in. Prior to introducing Jeff, just let me cover a few quick housekeeping items. All participants, excluding Jeff, Dave, and myself, will be muted during the webinar to reduce background noise and any interruptions. You can, of course, ask live questions by using the chat function in the Zoom menu. We will be passing your questions on to Jeff throughout the event or answering them directly in chat if your questions are specific to SWP's products or services. So feel free to ask away. Last time we had, a great number of questions. We hope that you guys will be participating this time as well. Lastly, the webinar will be recorded and posted on YouTube in a few days. So if you have to leave early today or wish to rewatch it later or share with friends and family, you will be able to do that as well. Without further ado, it gives me great pleasure to introduce tonight's invited guest. He's a good friend of mine, someone I've known for, at least a decade now. And actually, he was our very first SWP client. Jeff Clark's love for precious metals started at a very young age, watching his father prospect and mine for gold and silver throughout California, Arizona, and Nevada. Jeff eventually carved out his own path, focusing more on investing in gold and silver, starting as an analyst for Doug Casey's firm back in 2007. Combined with his love for writing, Jeff quickly became a globally recognized authority on precious metals. And I think that's a little bit of an understatement at this point. He is the founder of thegoldadvisor.com, and he speaks regularly at precious metal conferences all over the globe. Jeff also serves on the advisory board for SWP. Jeff, welcome to the Golden Turtle Social Club.
Oh, thanks, Mark. Thanks for having me. And I guess I owe you $20 for that very nice intro there. So
Sure. I'll take 1 ounce of silver instead. At this point, I'll pass the mic over to Dave to get things started. Dave, over to you.
All right, thanks, Mark. Jeff, once again, just want to thank you for taking the time to come here tonight. I know you're a busy man, but you always do make the time for SWP, and it is appreciated. So before we get started, we have a great list of questions here that have been sent in. But before we get started on that, could you perhaps just give us a little bit of a background about yourself? I know Mark did give a good introduction, but is there anything else you wanted to add for the people who may not be familiar with you and your work?
Well, yeah, my dad was a gold prospector. He didn't work for a company per se. He worked on his own with a group of people. And the biggest find he ever had was this giant piece of quartz. And it was really that about that big. And quartz is bright white, right? And there was gold running throughout this quartz. So it was this beautiful piece that had about 3.5 ounces of gold in it, we guessed. Um, but it was beautiful. But that was kind of what he did. That was his expertise. And then I got hired by Doug Casey's firm and started down the newsletter path from there. So yeah, and wanted to go out on my own, and that's how the Gold Advisor was born. So
All right, thank you. As Mark mentioned, if you do have questions that come up during this webinar, definitely put them in the chat. We're going to try to get through all the questions that were submitted in advance. And then any questions that come up tonight, we will do our best to answer in due course. Jeff, I'm going to ask you to, well, get your crystal ball out now, and you might as well keep it out on the table because we have a number of questions which are going to be asking what's happening here in the future. First one is coming in. A number of economic analysts have mentioned the possibility of a gold price reset as the price escalates. Now that we're seeing the price pick up in velocity, do you see gold repricing as possible or probable? And what do you think that would look like?
That's really an open-ended question, and I've thought about that. The bottom line is there are any number of things that could cause that to happen, whether it's central banks just declaring it some type of asset to back a currency. That would be huge. If Trump does something with it, if other countries band together, I don't want to see the gold price be set, though, like it would be in a gold standard where it's priced at $5,000 an ounce or 10,000 or whatever. Because then, some of our value might go out in terms of making a profit on it. So, we're in a run with gold right now, as that I'm sure everyone in the audience knows. Gold's been up tremendously. Um, I think it's possible that we could see a correction here. If you follow me on Twitter, you might want to watch my tweet tomorrow because I have a chart that shows the average price of gold throughout the year. So we could be, due for some sort of correction, or that could be completely off base this year because there's so many vulnerabilities in the system, right? So many risks. And a lot of the populace sees that. And while mining stocks are not keeping up, if there's uncertainty in the world, people turn to gold. They don't go buy a mining stock. So while that part of the market is still down, the gold price is still live and still running. So I think that it's highly possible that we could have a gold price reset. It's also probable or possible that we don't have any kind of reset whatsoever. So for me, I don't count on things like that. I just make sure that I own a material or significant amount of bullion to get me through whatever comes our way. That's how I handle it.
Yeah, I think it's the million-dollar question we get asked on the daily. What is going to happen in the short term? And I think you answered that very well. A correction could definitely be in the cards, but at the same time, there's too much uncertainty to know when that will happen and what that will actually look like when it does come. Um,
Hmm.
Speaking of the run up in price, I think we're over 40% over the past year. The next question comes in. At some point, I will be quite overweight with gold in my portfolio. Actually, most would say I'm there now. When will I know it's time to exit some of my position to become rebalanced?
That's a great question. I'm glad somebody asked it because you have to have a plan. You have to think ahead about, okay, what's my exit? And that's probably more important with things like mining stocks. But I think having an exit is a very important thing to think about. There's two things for me, if people find this useful, that would drive me to exit. But before I say that, I don't know that I would really exit all of my holdings in gold. Um, until the monetary system is basically reset or more honest or more stable. That's not going to happen anytime soon. They're already talking about printing money again, if you saw the article on that today. So I'm probably not going to sell everything, but there are two specific times when I could sell the bulk of my holdings. One would be I need it for personal reasons, whatever that may be, health, retirement, buying a house, whatever. Or the economy demands that I sell some of it. The economy's falling apart. There's a major crisis. The currency is in jeopardy. Hyperinflation would be an obvious example where you might need to sell some of your gold to keep up with the cost of living. So those are some scenarios where I might sell some of my gold. The other scenario would be if we go into some sort of mania, a price mania, where the price runs up. You remember in 1979, the price more than doubled in 12 months. And then it crashed. It came all the way back down. The bull market from 2009 to 2011 was not a mania. It was a nice, healthy bull market, but it was not a mania. But if there's a true runaway bull market mania, um, I would probably scrape some off the table. And the reason I would do that is not because I don't believe in gold. It would be because I want to participate in what would probably be at that time a wealth transfer. So stocks may be way, way down. Common stocks, I'm talking about. Real estate may be down. There may be other opportunities where you want to take some profit off your gold that's really spiked in price and use it for something else that is cheap. So you're swapping an expensive asset for a cheap asset. So that would be a scenario where I would consider um, selling some of my gold.
All right, great. That actually kind of ties in really nicely with my next question. You did partially answer it here, but it's basically about the evolving precious metal sector in 2025 amidst the potential economic uncertainties. So the question is, what strategies would you recommend for investors to not only protect their wealth, but also capitalize on potential opportunities during periods of market volatility?
Right. There's three things that I really insist upon for myself, and pardon me, perhaps people will find them useful as well. But one is no debt. Get out of debt. Don't add any debt. And I know for a house, I still have a house payment, but I have a very low interest rate, so it makes sense for me to keep that. Um, but no other debt. Um, the second thing would be having some sort of secondary income, having another source of cash flow, whether it be a second job or a business you start or something, but have another stream of income that can help you get through any type of crisis. And then the third thing would be, surprise, own enough physical gold. Um, that's what gold is for. Think about it. It's a hedge, it's insurance, and you want to have your fire insurance or your life insurance, whatever, however you want to look at it, in place so that you can use it if necessary in some of the other scenarios I mentioned. So that's the sort of the three-pronged attack that I take. The fourth would be holding some outside of my home jurisdiction. For me, that's the US. I live in California, and we spell that with a K now in California. So that's how I look at that. But yeah, I really was SWP's. If I could just divert for a second, I really was SWP's first customer because Mark sent me a list saying, "Hey, we're starting this depository. What would you want to see in a depository?" And I sent him a list. I told him everything I would want to see. I gave him the whole dream list, right? And at that time, there was only one other depository overseas outside the US that I was comfortable using, but it was way over in Singapore. It's like, okay, I can't really go easily see my bullion or go pick it up if I want to. Delivery is going to be a hassle and expensive. So I gave him everything I wanted to see in it. And he came back with his partner a few weeks later and said, "Jeff, we're adopting every single thing that you recommended." I'm like, if that's true, sign me up. So I said, I want box number one. So he gave me box number one. So I do think it's important to have some of your gold overseas. Some would say all of it, but I would personally not recommend that. Um, but I think you should have a backup plan. You should have enough stored somewhere like SWP outside your jurisdiction so that if you need to go somewhere, you have some assets and the financial ability to do so.
Hey Jeff, sorry Dave, I wanted to jump in there for a second. And I think I
Yeah.
have to correct Jeff on one thing. It is true,
Oh,
you were our first customer, but I believe the box number was your high school basketball jersey number.
oh, that's right.
Yeah, I think
Right.
I remember you
Yeah,
asking.
that's true.
Yeah.
Yeah, I got basketball. I mean, box number 21 because that was uh, my number in high school basketball. So
And it's a silly question, I'm a Canadian for anybody who didn't know that out there. Why K in California? What am I missing there?
communist.
Okay. Yes. Okay. There, we got
I
something
don't know
else.
if I should say that in a public forum, but yeah, we spell California with a K now. So you probably shouldn't in Canada too. Canada with a K, maybe.
Yeah, I have a feeling we'll talk a little bit of politics and its impact on gold and silver a little bit later. But Dave, yeah, back.
Yeah, there's definitely some political questions coming up in this list. I am going to pivot a little bit though, Jeff, specifically diving into some mining stocks. So we actually had a couple of people ask about specific stock here, Reyna Silver. It's down about 40% over the past year, but JB, one of our clients, just wants to know if you have an outlook or opinion on this particular company.
Yeah, I do. So for those that don't know, the Gold Advisor is a free site, but it's a sponsorship site. We have companies on there, and we write a daily newsletter on any company that reports news. So it's free to the investor. The companies support the site. Um, Reina Silver was one of those companies. As you might know, if you follow that story, the stock has not done well. They've had a difficult time raising money, as many companies have. But their stock got really low, and it was very difficult for them to raise money and issue shares and dilute shareholders a lot. So we unfortunately just agreed, like, hey, you don't need to be paying the Gold Advisor when you guys are struggling financially. So the sponsorship did end, and we stopped covering the company. We only cover those companies that obviously are paying clients, but to be a paying client, FYI, they have to be a stock that we would own and do own. It's basically my personal portfolio. Anyway, so that relationship ended and the stock continued to go down and really struggle. They did not make a discovery. So I eventually sold the stock. I did take a loss on it. But I sold because I didn't see, to be honest, a lot of upside potential. Um, the change there could be they obviously would need to make a big discovery, a genuine discovery, and not just like the last press release had in it. They found a lot of Pathfinder elements to making a discovery, so that didn't really move the stock. So I don't own it. Full disclosure, I'm not negative on them. It just I do see perhaps bigger or less risky opportunities elsewhere in the silver sector. I mean, my silver basket, if anybody wants to know, is first of all, it's Outcrop Silver in Colombia. In fact, I think I have their shirt on. Is Santa Ana? Yeah. So I've been there. I went to Colombia last year on site. I was there a week. Beautiful country, lovely people. I didn't want to leave. So I highly recommend the company. I think that's one that's going to grow. They have 37 million ounces now. Silver, I think it goes to 100 a couple years down the road. That's one, and then Vizsla Silver, and then Dolly Varden Silver. I'm fans of both of those companies and their management. Just be careful, don't run out and chase them. Vizsla Silver especially has run up a lot. But that basket right there, those three, I feel really good about that basket. Um, and I like Jorge, CEO at Reyna. I know him well. Um, but at this point in time, Reyna would not be in my basket.
Kind of following up a little bit with your strategy there. You said you were willing to, if you saw an upside potential, you were willing to hold on to the stock even though it was down. Is there a
That,
point where you just want to cut your losses when it comes to mining stocks, or are you willing to hold on for a long-term investment if you see the potential?
Yeah, that's a great question. The potential's still there with Reyna, for example, but again, the only way they're going to get out of that is they've got to make a, and with they just did a raise, so they'll probably be drilling this year. So there's that potential. I hope they prove me wrong. I want them to be successful, but it's pre-discovery, so the odds of that are tough. The risk is high there. So now to your question though, yes, you absolutely have to cut your losses on Sun stocks, and the question is, would you buy the stock now? So if you're down 50% or 90%, the question still remains, would you buy the stock now? Is it a buy? If you would, then you'd want to hold on to it. If it's not, it's painful, but you got to do it. You got to cut your losses and move on. There also will be some rotation. What I mean by that is you're not going to buy one stock or a basket of stocks and just hold them throughout the bull market. You're going to be selling some, you're going to be taking profits on some, you'll let some run, but you're also going to be adding new ones. There's going to be new ones all the time. And frankly, that's one reason I have a paid newsletter also, is because there's going to be rotation. There's going to be new companies that are exciting, that are coming in and could make a really big gain. So I think you have to keep both those things in mind. You do have to clean house sometimes. And the question to ask there is, would you own it anyway? And then be sure and look for new opportunities as you go along.
Another company which was specifically asked about, and that is Newfound Gold out of Newfoundland in Eastern Canada. Do you have any thoughts on this one?
So that stock, I think the question was framed about, is it a real discovery, or is it a real, or is it hype?
Is it hype?
Um,
Yeah.
it's not hype. That's a real discovery. They've made a discovery. That's real. The question is really now, how big does it get, and then how long is it going to take to get into production, which is going to be years, obviously. But um, so. For me, one of the tenets of Pay Dirt, the book, is you can't chase it. You have to have a proper price. And by a proper price, I mean you can't chase something that's already went 10x or 5x or whatever it is. It really has run up a lot. They made the discovery a couple years ago, 2 or 3 years ago. The stock shot up tremendously. It's given probably half that back. I haven't looked, but it's given some of that back, so it could be a good entry point. But if you buy that stock now, you would want to hold until they go into production to see the full price appreciation. And that's gonna take years. But is that a real deposit? Absolutely.
Great, thank you. Now, I am going to ask maybe a tough question. It's going to be a hard one to answer for you, just because it wouldn't be your strategy, of course. But Mark out of Vancouver, British Columbia, would like to know if you could only own one company from your Gold Advisor Pay Dirt portfolio, which one would it be?
Is that Marky actually that's asking that question, or is that a different?
It's a different Mark. This is from
Okay,
the
yeah.
Vancouver area, British Columbia.
So my answer to that is the same I always give, and that is that's not how I invest. I only invest as a basket. So you have different levels of risk with mining stocks. Pre-discovery is your biggest risk. That's where Reyna is, for example. Newfound Gold is beyond that. They've already made a discovery, right? But pre-discovery is your biggest risk. So you can have a small basket of those. You can have a small basket of companies that are developing projects, and then you could have a small basket of producers, or my favorite category is a pre-producer. And the reason that's my favorite category is there's been extensive research done by Lobo Tigre, who was actually my mentor at Doug Casey's firm. And he's looked at over 100 companies in this sweet spot, he calls it, where they've declared a construction decision and now they're building a mine and they're going to have first pour, it's called, when they pour their very first bar of gold, which is typically 18 months later. So from construction to first pour, there is, based on the research, a 90% chance of a 90% gain in the stock. And of course, they don't all do that. Some do better, some don't quite do that. Some you wouldn't want to own anyway. But in single asset mines where they're developing one project, if you buy when the construction decision is declared and you sell or take profits when they pour their first bar of gold, there's a lower risk chance of making a very nice gain in a stock, in a mining stock. It's almost predictable. So I like that category. We have a couple in our paid newsletter right now that are right in that category right now. So anyway, there's different categories, and with the highest risk ones, the pre-discovery, you don't have to put as much in, because if they do make a discovery and you'll see a big gain. A good example there is A-Mark Resources. We had that in the free letter. They found a big copper discovery up in BC. They just announced it last month. Stock shot up 171% in one day. So you don't have to put as much money in those, though. But my answer to your question is I wouldn't give somebody one pick, especially if it's in our paid newsletter, because I don't want anybody getting mad at me. Like we end up selling it because we have to sell it and it craters and they didn't know we sold and they get mad at me. So I won't let you get mad at me. So, but that's how I handle it. I'm happy to take more questions on that topic, but that's how I view it.
Yeah, just so we're on the topic, for anyone who would like to sign up for either your free or paid newsletter, where do they find that?
So it's really easy. It's all under thegoldadvisor.com. You'll see my ugly mug there at a mine. And if you can name the mine that is in that picture of me, I'll give you a free 3 months of the Prater Prospector, it's called. Um, but it's all there. Then you'll see the tabs for paid or prospector. That's the paid letter. So that's a little more advanced. The free letter is the Gold Advisor, and we also have a Silver Advisor free letter now too. Again, those are sponsoring companies, but they're companies we own that we invited. They didn't. A lot of companies ask, but we only have the companies on that we personally own or would buy. So there's a lot of free stuff there. Peter Kraut came over. He handles the Silver Advisor. We always talk about M&A in the mining sector. Well, we've had a little M&A in the newsletter sector. I did purchase Resource Moving, Gwen Preston's business. So Peter Kraut came over that. He handles all the silver stuff. We have a premium letter for high net worth people. And then two different paid letters, one that focuses on gold and one that's on silver. So there's lots of resources there. Yeah.
Right now, I have a couple of beginner investment questions for you. So, what is the biggest mistake you see investors making when entering the precious metal space?
I mean, there's a lot of mistakes you can make. You could chase a stock, you buy a stock that maybe you shouldn't be buying, or you buy a stock you didn't do a lot of research on it. Um, you hold on too long and you never take profits or never sell. The mining stocks are very cyclical. But, in my opinion, we're at the beginning of a bull market now. We're just getting started. We're clearly in a bull market when you look at the price of gold. It's just a matter of when the mining stocks start to really, make a bigger move. Some already have, and there's some in our free letter I probably wouldn't advise people to buy even because they've run up so much. Um, but there's a lot of different mistakes you can make, and I always got asked, well, how did you pick stock X or Y, and why didn't you pick this one? And so I eventually ended up writing a book. It was recommended to me pre-COVID, and I just couldn't because I was too busy. Um, but then COVID hit, and I kind of lost that excuse, right? So I sat down one night in the office, turned on the night light, and started to work. And 2.5 years later, the book finally came out, and it's called Pay Dirt. It's on the website as well. But I bring it up not to sell a book, but it does address that whole question of how do you evaluate a mining stock? And so there's a lot of info in it. I actually have 17 other people that I interviewed as well and put in the book, all the way from the Rick Rules of the world, all the way down to geologists you've never heard of. And they give their input on different points in the book about what they're looking for in a mining stock. So that was written with that purpose in mind to help someone navigate it because it is a different industry than just buying Apple or Amazon, right? It's very different. But with that book, I promise you can be 90% ahead of the curve if you take that book to heart.
Hey Dave, I was just gonna to add to that. I know Jeff's touched on kind of the what to avoid if you're investing in mining stocks, and I wanted to just throw it also, on the physical metal side. And Jeff, I'd love to hear your opinion on it as well. But one thing that we do see, and it's unfortunate, we've seen more of it lately. We've seen kind of these high pressure sales taking advantage of older folks, especially in the US. You have celebrities that are endorsing gold and silver companies, on television. These companies have fairly big marketing budgets, and we saw one that had Chuck Norris as their celebrity spokesman, another had a Fox news anchor. And what they're doing is they're selling these really high premium, kind of limited mintage coins to people. And it, they get the salespeople get these older folks on the phone and kind of pressure them into it or provide them with misinformation, telling them that they're going to recover obviously their investment, they're going to do really well in these coins. But when, the truth of the matter is, it comes time to sell these coins. Like you said, there's a number of reasons they might do that, or it's part of their IRA and they're cashing out. And they're like, wow, these are worth like 1/3 of what they were sold to me for. So just the takeaway there is like, before you buy precious metals, always do a little bit of homework, always educate yourselves, obviously. I don't think it would be so much an issue for the people in this room, but that is one thing that we see quite a bit. And you can always avoid that by just buying products from, sovereign mints, regular bullion products from
Yeah.
sovereign. I think that's like the
Yeah.
simple, way of going about it.
Personally would, tell most people to avoid numismatics, collector type things. Now, my dad loved that. He was very much into it, but it was a hobby for him. It was a part-time hobby. So he was very educated and he knew when he saw a good buy and when it was time to sell something or not to buy something. But if you're buying collector stuff, that's a different thing than just buying gold bullion. So for most people, unless you want to become a, collector and educate yourself about it, most people can just buy bullion. Don't buy numismatics, buy sovereign coins and bars and things like that. So that's what you want. I have a quick story on that. I actually bought one numismatic coin once. I can't, back in 2006, maybe, I can't remember. Anyway, the price of gold, about, I don't know, 5 years later had doubled. And so I thought, oh, I bet my collector coin is worth a lot more. And I went back to the same guy I bought it from, and he offered me the same price that I paid when I bought it 5 years earlier. And the gold price had doubled, and this coin had not. Because collector coins, the value and the price and the factors there are more on supply and demand and things like that. That's not the case with bullion. It tracks the price of gold. So
Yeah, it is a really sad situation when we have people call us up and they've been taken advantage of and sold these, ultra high premium products.
you're
Um,
right.
if you're into numismatic coins, great. That's fantastic, but it should be not treated like an investment in gold and silver bullion. But speaking of those products, Jeff, like what is your pick for physical metal? Do you have any specific bars, coins, which you tend to turn to?
What's my pick for coins? Is that what you said? You kind of
Yeah,
blanked out.
coins, bars,
Oh,
what format do you personally like buying?
so how I do it is this. I love coins. They're pretty. They're great to get and hold in your hand and look at and all that fun stuff. So if I'm taking delivery, I get coins. If I'm using storage, I use bars because that's the shape of a gold bar like this. It's made that way for storage purposes. That's what bars were made for. But the premium on bars is so much cheaper. And Mark, you did a great video on the difference between bars and coins a little while ago. Uh, but the premium on what you're paying extra above spot for bars is very low. So I just use that for storage. But if I want to take personal delivery, then I get the coins for that. I pay a little bit more for that. And if you stick to sovereign coins, the reason you want to stick to those is because you will frequently, especially in a gold bull market and especially in a mania, you're going to get that premium back. So, and I actually tried that once in 2011. I was in Vancouver at a conference and I had a sleeve of silver coins. And I wanted to see what I would get if I sold them back. And this was like 2011-ish, I believe. Gold was really running good. Silver was running good. So I went into a dealer there in downtown Vancouver, and I was paid above spot. I was paid above spot for selling those coins back. So, and of course, that only happens when the demand is high, which is when the prices are running. So, if you ever want to take some profits or sell some, that's a good cue. That would be a good time to do it. But I'm just letting you know that in my personal experience, they didn't know who I was. and I went in and they paid me above spot for just one little sleeve of silver coins.
So
But
you
they were
mentioned
sovereign coins, by the way. They were Maple Leafs, I believe.
Maple
So
Leafs. Yeah, that's
yeah.
probably the most popular coin we sell, the Canadian Maple Leafs. So you mentioned the difference between a bull run and like a mania. Um, do you see, or what would it take to switch from one to the other? We're in a bull run. Prices have been going very strong, but what would it take to kick us up to the next level to get to the mania phase?
Something major breaks, in the economy or the markets or something, and it just pushes people more into gold. There has to be more what I call sector rotation, where you have more people from the general markets or the mainstream or Wall Street or whatever coming into the gold market. And despite this price run in gold, we haven't seen a lot of rotation of capital into the gold market. It's still playing over in the S&P and crypto and AI and all those things. So when those markets weaken or profits go down or there's a crash or just a bear market, that's when I believe we'll see some money flow into the gold market because the gold price is so high, even though inflation is up, the gold price is up more. And so the producers are generating a lot more profit now than they were just 2 years ago, even a year ago. So they're going to be attractive. There's going to be a lot of green in the screen, when they go to look at these stocks, and that could bring them over. So I think it's sector rotation that will draw that over, and could push us into a mania at some point. Depends, what breaks and how bad it gets. But um, the odds of a mania are good. But we're in a bull market already. It's just a matter of when the mining stocks catch up, in my opinion.
Yeah, I think you touched on it there, saying that the price run up here hasn't really been caused by retail investors, specifically not the North American investors. What we're seeing is high central bank influence. So the next question is, with central banks aggressively accumulating gold, what message should the retail investors take from this trend?
Well, if central banks are buying gold, regardless of what they say publicly, right? If they're buying gold, shouldn't we? And most of the central banks that are buying gold are countries that don't use the US dollar but are impacted by the US dollar. So they want to diversify away from or have another asset to use other than US dollars. And that's why they're buying gold. And wow, what a message. We should be doing the same. We should have some asset that is not US dollar denominated or even Canadian denominated. We should have an asset that's denominated in something other than US dollars. That's why they're buying, and that's why I think we should be buying as well.
Yeah, I personally tend to agree with that, Jeff. The central banks tend to take a lot of heat from the public, but they do employ some very smart people, and I'm often, take my cues from them as well. And to Dave's point, the ETF market in Europe right now has really been purchasing a lot of gold, probably influenced by what's happening in Ukraine,
Yeah,
especially over the last couple of weeks with the whole U.S. foreign
yeah.
policy shifting. But North American market, yeah, what we're seeing at SWPs, it's still kind of moderate buying. It's not sleepy, but it's not mania, that's for sure. And maybe not even reflective of the prices that we're seeing. So we certainly.
Well, the true sign of a mania mark will be when you need to build a bigger vault. So I know you already built one bigger one, but that would be the sign of a mania.
Yeah, that's true. And especially you touched on it earlier, right? When physical products are, you're getting above spot for those products, that's a great indicator that there's a shortage. There's a short-term shortage of those products in the market, and we're not seeing that at this point in time. Bids are
Yeah, I
still.
think when that'll be another sign when retail buying gets really crazy. But and you're right, we haven't seen that. It's not just SWP, it's industry wide. We haven't seen a retail mania at all in products. So, and when that happens, by the way, you want to buy before that happens, obviously, because when it happens, not only is the price going to be higher, but the premium is going to be higher. The demand is going to push the premiums higher. So that'll be a fun day for those of us who are already along if you've built a position but before that happens.
Exactly. Yeah, you're right. It kind of becomes everything gets squeezed and price and premiums go up. That's why if you're adding ounces in a slower market, your premiums are lower, you're getting a lower price, so you really take advantage. And then you get into these situations where the premiums are high. And like you said, you'll actually recover your premium or part of your premium in a bull market. So it can be challenging for people to time it, but it's certainly possible. One question from the chat, Jeff, wanted to throw at you.
Sure.
You are American, you're living through the news cycle. I'm sure we're all watching. But the question in the chat is having gold stored in the US a risk now, in your opinion?
Oh, that's a good question. Yes. Um, I use a vault for storage, gold storage that's in my IRA, and it's in the U.S. I also have some close by. I don't keep any in the house anymore. I'm in the public eye. I have a fake bag of coins. They're dummy coins. So if somebody comes knocking in the middle of the night, hopefully they grab that. But then the third prong of that is I definitely have some outside my jurisdiction. So it doesn't matter if you're US or not. I believe you should have some stored outside of your political jurisdiction. Um, but yeah, I think there's risk in the US. It doesn't mean that other jurisdictions are have no risk. Um, but I think how you store it, who you store it with, is probably as big a concern as any. You have to have a very reputable dealer, and you have to have custody of that. And Mark and Dave can explain that more, but you have custody. It may be stored with, bullion dealer A, but as long as they don't have custody and you have custody, that makes the difference. So that's how I handle it. I think there is a risk. I mean, we could talk about the risks and what could happen and all that, uh, with some type of confiscation or nationalization or whatever. But for me, the answer is still the same. I want some stored close by so I can get to it in an emergency. That's one purpose of gold. So you can use it in an emergency. But I also want some that's stored outside my political jurisdiction. And you know what? That's even if you don't use it, you don't lose anything. You still own the gold. You didn't pay more for it. If you use SWP, you didn't pay more for it. So that's a great strategy right there. It doesn't cost you anything more to store some outside your home base. So that's how I handle it.
Jeff, do you have a story about um, gold being stolen or a loss somehow? I believe that there's something there.
Yeah. Yeah, it's a little embarrassing, but we did have some gold stolen out of our house. In fact, it was most of the holdings that we owned at the time. And what you should be aware of is that it was in a locked safe. The key was stored in a different room. The um oh shoot, what do you call it? The little box that I stored it in was in a closet with the door shut. All of that, and they still found the gold. They broke into it and it was gone. And you don't have insurance on your gold, so it was gone. So that was a painful lesson, and I wrote a big article about it. I believe it's on the SWP site, right, Roberta? Um, and I really went into some detail there about it. So it's not fun for me to talk about because it's embarrassing. I work in the gold industry and I had gold stolen out of my house. Um, but hopefully some people learn from that. And the point there is that, just because you hide it or put it under lock and key, doesn't necessarily mean it's safe. And don't think you're safe with a combination lock or there's no key, you have to know the combination. My dad knew someone in a town maybe half hour or so from us who was robbed at gunpoint, and his wife was tortured until he gave up the combination to the safe. So you just be careful, storing some in your home. That I use a lot of several different facilities, SWP being one, but I just don't like to have it near the house because of the risk.
No, I appreciate you sharing that story with us, Jeff. It's I'm sure it was a terrible experience to go through. So thank you for, sharing that knowledge. I think most of our clients do like to keep some gold close to home, but there does get a point where you're going to start to lose sleep over it. And you're not going to feel,
Yeah.
and times like that, that's when you definitely need to think about a secure storage
Yeah,
option.
just picture like the devastating effects of a hurricane that we had recently, or the fires in LA, how's your wall safe holding up there, in the middle of a hurricane? Some people in Japan when the tsunami came, their gold just washed right out to sea. So, um, I'm not saying don't keep some at home. I'm just saying only keep some of it close to home.
Yeah, nothing more than you'd be willing to lose, I think, is a good way to look at it. Going to change a little bit now, talking about some recent political news. Obviously, there's a lot going on, and that's an understatement. But talking about the tariffs. So at this point, no one really knows exactly what tariffs are going to be implemented and what effect they're going to have. Historically, though, tariffs and trade wars have driven investors into safe haven assets like gold. So, given the current economic and political climate, do you see gold's role as a hedge against uncertainty becoming even more pronounced if we do come into a bit of a trade war and tariff situation?
I think that's why gold's going up right now is because of the threat of tariffs, the talk about tariffs, the reaction other countries are having to possible tariffs. Markets are forward looking, and I think, the market is looking at those possibilities and wanting to own more gold. And that's why the price is going up almost every day. Um, if they become reality, that's a whole nother level, right? And maybe that's what really kickstart this thing. I mean, we're going to be at $3,000 gold, here any day probably, right? So, $3,000 for a little ounce of gold. Think about that. So, um, you know, I, but anyway, with tariffs, I think that's really, something that is kind of scary. Um, I wonder if Trump has this plan. I hope he has a plan. I think that he might be using that as a bargaining chip, right? But the way other countries are reacting isn't maybe how he thought they would react. I don't know, but if that really materializes and we get into some sort of trade war or tariffs, that's going to drive gold higher. And we're also going to see higher prices, consumer prices at home, whether it be groceries or gas or whatever. So I think making sure you own enough gold is a good idea, even though the price is high right now.
So with that, a lot of analysts do think that tariffs will push inflation higher. Usually that would be bullish for gold as well, correct?
Yeah, I mean, it's not a one-to-one relationship. But generally speaking, when inflation moves, gold moves, and silver will move as well. We saw that in the 1970s. There's a very interesting chart I have of the CPI back from the 1960s to 1980. And there was this big run up, and then it came back down. But then unexpectedly, the CPI reversed and started back up again. Guess what? I overlaid our CPI on that chart. Big run up after COVID, right? It's come back down. And guess what? The CPI is turning back up. Now, maybe nothing happens to that. It doesn't, maybe it doesn't run back up as high as it was or whatever. Um, but the risk is there now. The risk a year ago wasn't there, but it's there now. And if we see inflation run back up high again, yeah, I think you can reasonably expect gold and silver to run as well. And that might catch people off guard, the general populace, and that could really ignite some more gold demand.
Yeah. So tariffs don't just impact the financial markets, but they can also affect mining operations as well, supply chains, refining costs, etc. So do you think that there would be with these tariffs a tangible impact on gold supply or production, silver as well?
It probably wouldn't affect production. Well, it could if costs got too high at a certain mine and it was uneconomic, they could shut it down. But what would happen is the cost of producing would go higher, so the margin would come down for those um, producers. But again, if the gold and silver price is moving up, then maybe the margin isn't affected, even though inflation's higher. In fact, costs for gold production right now have risen like 50% over the last 6, 8 years. But guess what? The gold price has risen more. So the margin in the middle of a rising price environment, inflationary environment, the margin for gold producers has actually risen because the gold price has risen more than the cost of production. So we'll see if that continues to play out. But right now, the margins really for gold producers have never been higher.
Now, I know there's a lot of regulatory costs at these mines, environmental impact
Mhm.
assessments, etc. So, what is the largest driving factor of the increase in mining costs over the past, let's say, 10 years?
Well, when inflation started to move, it was the cost of materials, whether it be oil or supplies or whatever. And then the second biggest cost was the increase in labor. You had to give people, a higher wage to want to mine. When you go out and mine, you're leaving your home. Some places you can go home at night, many you cannot. You're staying in tents or cardboard, little mini homes. You may or may not have internet access. So, you know, uh, the costs go up. You have to pay people enough to want to do that. And so the costs go up. So those are the two biggest things. But the third cost, which you're kind of hinting at, is ESG. All the costs for environmental, social, and corporate governance, regulatory compliance, all those costs have gone up. And so that is added into what it takes to build and operate a mining operation. So, um, in total, those costs are still not going up as much as the price of gold is, thankfully. So they're still profitable.
So I'm going to talk about some very recent news, something that was in the papers today and on the news site. This has to do with Fort Knox and a potential audit. So it's something that people have
Yeah.
speculated for years that there is, actually not the gold they say there is in Fort Knox. I think rough calculation about 147 million ounces of gold should be there. Elon Musk wants to do a live stream of a audit on X, and knowing how much work it actually takes to do an audit of the vault at SWP, I think that would be a long and boring live stream, to be honest with you.
Right.
But how transparent is the U.S. government with its gold reserves, in your opinion? And do you foresee them allowing a full public audit of their holdings at Fort Knox?
A great question. I think, is the government transparent? No. But for me, is the gold there? The gold is probably there. The issue for me is how much of that has been leased out? And being leased and paid for by other people, other entities, like whether it be governments or whatever. That would be the issue, and that would take not just walking through the vault looking at the bars. That would be a full audit like you guys do at SWP, and you're right, would be very long and tedious and boring. But that's really the issue for me. So I think, hey, Trump's president, and Elon Musk is a force of nature, so it'll be, if nothing else, it's entertaining to watch. So, but yeah, the rhetoric that even Trump today said, I think we need, he was on the Air Force One saying, yeah, I think we need to go in there and count the bars or something like that. So, um, I think at some point they probably will force it, which is good. It should be audited.
Yeah, I
Hey,
agree.
hey, Jeff, you mentioned Trump, and I by no means do I want this conversation to turn political. I think we all get it. The question I wanted to ask you, and I think it is really relevant, is from a like if you look at the whole picture, Donald is you love him or hate him, agree with policy or disagree. Is he net positive for gold over the next 4 years? Are his actions and policies net positive for our industry?
Probably, yeah. Because, all the tariffs like we talked about, those are inflationary if they get instituted. There's more conflict now. There's more uncertainty, definitely. There's more countries that, right or wrong, don't like the US, don't like Trump and what he's doing, and are taking defensive measures. That spells gold. So, again, you're right, not being political, but I think he probably will be. And keep in mind, though, that Trump isn't the only reason we own gold. We own gold because of, monetary issues and the risk and vulnerabilities in the system that are beyond Trump. So Trump is can affect the price of gold by certain things that he does, but we own it for bigger reasons even than that. So. Um, I think if we had this podcast 4 years from now, I think I'll be calling in from, a bright red Corvette or something. So I think the gold price and gold stocks are going a lot higher.
Fair enough. And to your point, Jeff, earlier about inflation, actually, when it was really running hot over the last couple of years, I did some research myself. And what I found from looking at, the 70s and 80s, and even more recently, in the 2000s, is when you have a strong run up in inflation, gold doesn't react the next day. It's a lagging effect, but it does
Ah,
it does catch up to the inflation eventually. And I think that's some of what we're seeing right now is still the lasting effects of gold catching up to inflation. And the lag tended to be like 6 to 12 months. So it's, because I remember when inflation was running at its peak and everybody's like, why isn't gold as high as it should be?
that's right. That's right.
Once you go and look back at the previous research from those times, and that's what I found essentially is it does catch up, but it just lags behind. So seeing the CPI tick up again, not knowing where it'll end up, but we might see a little bit of that effect on gold in the coming months as well.
Absolutely. If it keeps running and gets hotter and hotter, people aren't going to like that. That's caused by Trump or not, it's not going to matter. And if it starts running hot, I think we can expect to see gold and silver run a lot higher too.
Yeah. Dave, there's another question in the chat, and I don't know if it's going to be in Jeff's wheelhouse or more in your wheelhouse, Dave. I know you
Okay.
follow crypto a little bit closer than I do. The question is, thoughts on cryptos being used as a proxy to support the treasury market? I asked Eric to expand. He said US government or any other government officials for many years were against cryptos. Only in the past few months have they flipped their position. Okay, got it. The main driver of the flip was some of these cryptos buying treasuries as collateral. Francis Hunt and Matthew Piepenberg mentioned this.
Yeah, it has to do with the US stable coins. So effectively, USDC and Tether, I think they're now in the top 10 buyers of US Treasuries. So we're not just looking at nation states anymore, but the US is really trying to drive these stable coins as a way to prop up the currency again, because they are buying treasuries here in massive numbers. What that's going to look like in the long term, I can't quite say, but it's definitely a way to secure the U.S. dollar in a changing, global landscape as things are becoming more digital. The fact that stable coins are accepted worldwide, it is a proxy for the US dollar, and it is certainly something that the US government seems to be putting some focus on. Big talk as well with the Donald Trump being the crypto president, as they say him, talking about putting Bitcoin on the balance sheet and monetizing the US's balance sheet. Kind of brings us back to the gold which we have in Fort Knox. That's actually it's pegged and at a price of $42 an ounce, and I think it's been there since 1972. Jeff, do you think if they change that to, a regular floating value, so they take the 147 million ounces of gold, which is at $42 an ounce, and they value it of what it should be at fair market price, do you think that would have any effects on the actual gold market itself, or is that just an accounting thing for the US government?
Well, it is an accounting thing, but it would probably wake some people up. Like, wow, we have that much gold, not necessarily ounces, but that much, money that, in gold. I think that could really wake up the market. What they would reprice it to, though, would be a conservative figure. $42 back then was actually a conservative figure. So if they wanted to fix their reserves at a certain gold price, it might be, I don't even know if they'd go to $2,000, It's the same with mining companies. When they do these studies and project their reserves, and then there's studies about how much they can produce, they use a very conservative gold price. You have to, because you don't want the gold price to drop so much that it goes below what your study says, and all of a sudden your mine is not feasible to build. So they are conservative. I think the U.S. government would do probably the same thing. Now, will they change the price? Hey, with Donald Trump as president, anything's possible. I don't put anything off the table when he's running the show. So I think that could happen. It probably should happen. That's kind of a ridiculous price for gold, $42 an ounce. So
Yeah, that doesn't make a whole lot of sense to me, to keep it at that price. I'm going to circle back slightly here, going back to crypto, Bitcoin specifically. So we've actually found, I've seen here, SWP, some of the younger generation is finding out about gold, believe it or not, from crypto. So they hear about Bitcoin, they start going down the rabbit hole, they start learning about fiat currency, sound money, hard assets, etc. And that actually gets them to find out about gold. It kind of like leads them in that direction, which is kind of a roundabout way to bring in the younger generation. But do you have any thoughts about the crypto market and Bitcoin in general?
I don't own any at this point. I used to. I'm out of the crypto market, not because I don't like it. I think there is probably going to be some value there at some point. Not the price of Bitcoin, but real value that can be used. At some point, I think there's, using the blockchain, that's a great thing. That's a great idea. But I'm such a specialist over in this little tiny little sector of the world and mining stocks, especially juniors, that I've devoted all my money to that pretty much. So I'm basically at both ends of the barbell. I'm very conservative where I have, cash and CDs and gold. And then I'm at the very other end of the barbell where I'm in risky junior money stocks. I don't have a lot in the middle. Um, so I don't have any crypto yet. Maybe at some point that basket will come, but for right now, I'm just kind of focused on my own expertise.
All right, then coming back to precious metals with gold versus silver. So we got another question here. Investors are drawn to silver for its volatility. Often in bull runs, it will outperform gold. So how do you see that playing out over the next few years, the silver versus gold debate?
Yeah, the gold silver ratio is still around 90 as we talk here. That's very high historically. Um, so I do expect that to come down, meaning that the silver price is outrunning the gold price. Just like Mark was saying about the lag between inflation and the gold price, there's also a lag between the gold price and the silver price. So the mantra is gold leads, silver lags. And that's been true many times. But what we usually see is that before that bull market is over, silver outperforms gold on a percentage basis. So it gains a lot more than gold by the end of the bull run, meaning the ratio is going to fall. Um, so I don't know the ratio is going to go back to, 18, 20, whatever it was at the peak in 1980. But the historic average here the past 30 years, I believe, is around 50, 55, and we're at 90. So that just just a return to the mean alone implies that silver is going to run higher. Excuse me. Silver's not had a big run. Gold has and is. Silver hasn't had its big run yet. So, I think that's still ahead. And over the next several years, I think, frankly, we'll make a lot of money on silver. You have to be a little more nimble with silver. Like I was talking earlier about taking profits in a mania. You especially want to do that with silver because it's so volatile that it can spike really high and 12 months later give it all back. So you have to be aware of that. Silver's not an heirloom, unless it's, a knife and fork made of silver. Um, so you'll want to make sure that you sell and take some profits. Mark probably doesn't want to hear me say that, but you might want to consider doing that. So.
No, I mean, I'm all one for, taking some profits as well, Jeff, when it comes to gold and silver. I think one of the biggest mistakes I've seen over 20 years now of selling gold and silver to investors is that people become very loyal, like overly loyal to precious metals. Yes, it's done us all favors in our investment lives, and I'm really glad that I had the opportunity to learn about it through my career. But there are moments in time when, if you've tripled the value of your investment, you might want to take some of that profit.
Yeah, exactly. Yeah, I
Just
agree.
hold
100%.
on. And I've said this before, I think there's a little bit of a disservice when newsletter writers make outlandish predictions like $10,000 gold or $500 silver. People just hold on because they believe that it will happen because someone has said it. And they miss so many opportunities to sell and even rebuy at a lower price than where it is now. So it's
Yeah, right.
like you said, there are a lot of cycles and wealth transfer opportunities, and I think people have to keep an open mind to that. But I just wanted to kind of put out a message here, guys. We're going to probably be wrapping up in the next 5 minutes. We're going to ask Jeff for his final thoughts. So if you do have a question, please pop it into the chat so we can make sure that we have the chance to ask Jeff that question. Jeff, I wanted to just comment really briefly on something you touched on earlier, which is the ownership of precious metals and like the form in which it is held. And it's such an important talking point because there are a number of different ways that you can have exposure to precious metal investments. We talked about miners a lot. Obviously, there's ETFs that we've mentioned once or twice. There's unallocated, pool programs, all these different ways, and they all come with different cost structures. But it's always a great reminder whenever we have an audience to remind people, like, you're really looking for the allocated, segregated method of storing your metals. And the reason to do that is because when it's stored that way, under the law, it's considered your personal property. And personal property guarantees you rights that otherwise you may not have. And you can always find ways to save a 1/4% or a 0.5% on the custody of your metals. But what you're trading in return for that savings is your rights essentially, because it's no longer considered your personal property. So I just wanted to take a second to touch on that because you had hinted at it earlier, and I know it's such an important point, something you've talked to me about a lot over the years as well.
Yeah, if what is the reason you own gold? It's for some type of crisis. It's a hedge, it's insurance in case you need it. Well, if it's in some other form, you may not have access to it. And the worse the crisis gets, the less access you may have to it, especially unallocated. They can just sell it and send you your proceeds and you have no more metal. So I like having gold, physical gold in my name under my custody, even though it may be stored elsewhere, it's under my custody. It's my personal property. I have access to it. It's mine. That's what I want. And I think that's what everybody wants. And the greater the crisis, if that happens, if we get a true crisis, the more you need it under your custody and under your control.
Yeah, I couldn't agree more. Jeff, we're going to wrap up. You've given us so much of your time and a wealth of information. It's been a great discussion. We've covered Trump, we've covered mining stocks, we've covered physical metals. Any final thoughts? You've been doing this a long time, you've seen a lot, you're going to keep going, obviously, traveling to all these conferences. What are you talking about? What will you be talking about in the upcoming presentations that you make to people?
Well, I'm going to be focused more on mining stocks, talk about gold and silver, of course, but that's really my focus is on the mining stocks, and so I'll be talking about them and why you should own them, some general rules with that, and then I always give away stock picks in my talks as well. So I've got three different conferences I'm speaking at here coming up starting next week, so there'll be lots there. Those will all come out on video. They'll be free at some point. I'll have them on Twitter. They will be in our newsletter. You can sign up for our newsletter for free. That's really going to be my expertise. The reason I'm doing that, by the way, is because, gold's run up and the mining stocks have not. Some have, but in general, they have not really kickstarted yet. And so I think those of us who are exposed to mining stocks in a responsible way can stand to make a very nice profit over the next few years. At least that's what I'm doing. I'm devoting myself and I'm going to use all of my ability and experience to profit as much as I can from this bull market.
Yeah, well, there's no doubt that you are the man with the experience, and we appreciate you sharing that with the rest of us. On that note, I think we will say goodnight. Thank you once again, Jeff, on behalf of myself, Mark, the rest of the SWP staff, and the clients that joined in today. We appreciate you joining us tonight, taking the time, and hopefully we'll get to do this again.
Absolutely. Next time, Mark, you're going to have to bring me down to Grand Cayman, okay? I think we'll have to do it, from the vault there. That's what I'm going to ask for the next time.
You're
Well,
welcome anytime.
we're working on it, Jeff, actually. That is the 10th anniversary celebration is in the works. So
Wow, that's exciting.
for you and everyone on the call about that.
That's exciting. Congratulations, guys. You've done so well. SWP has grown so much. It's really amazing.
Appreciate that, Jeff. Well, thanks, everybody. Have a wonderful evening. We'll see you again soon.